Last week, the Federal Reserve voted to keep interest rates near zero despite a spike in inflation. Fed Chairman Jerome Powell said that he wants to see the labor market heal further before implementing tools like raising interest rates. Inflation has soared to its highest level in 30 years. The central bank also disclosed a plan to dwindle its buying of at least $120 billion worth of stocks a month, a strategy implemented during the pandemic. For more on what all of this means, I want to bring in Joe Menarik. He is the Senior Vice President and Director of Research for the Committee for Economic Development. He was also the Chief Economist for the Clinton administration. Joe, always appreciate you coming on to help us make sort of common sense of what is happening over at the Fed. So tell us, what does the decision to keep interest rates near zero mean in practical terms for all of us?
Interest rates that most people face will not change very much. The decision to taper the purchases of longer-term assets will have a small impact on the market going forward, but holding that basic Federal Reserve policy-making rate down at zero is an indication that the Fed is looking very carefully at economic conditions and being very proactive at trying to maintain the current economic recovery, which is making its way slowly into an expansion phase with all the things going on in the economy between the coronavirus and supply chain. So it's an ongoing fight, but the Fed is making clear that they are watching data and will respond accordingly.
Well, I want to ask you about a bond market stat called the break-even point. It rose above 3% last month. Explain for all of us what that means and why we should be caring about it.
There's an indication that perhaps people are beginning to think that that inflation is likely to be a little bit higher in the future. This is a process in which I think we have to follow what's going on. It's not your usual economic cycle. There is this the development in our supply chains, which is holding down the availability of certain goods. Automobiles are an example. And the fact that prices are rising will lead to a certain amount of concern on the part of consumers going forward. But this is not your conventional inflation. It's not your 1960s, 1970s inflation where there was a generalized increase in prices. So far, prices are increasing in spots according to the availability of commodities and products. So long as it stays that way, we can remain confident that over a period of time, as the supply chain situation heals itself, we will begin to see a slowing of prices and in some instances even a decline of prices back down to the kinds of levels that we saw before the pandemic.
So, Joe, I think that's a really important point, that this is not a normal economic cycle given the pandemic and all the tendrils of the effects that has had into our economy. But how much of this is solely due to the supply chain issue? What are some of the other causes of the inflation? And is there a way to put brakes on these rising prices, or as long as we have the supply chain issue, as long as we have the pandemic, as long as we have sort of consumer uncertainty, are we expecting these prices to continue to rise?
Well, in addition to the supply chain issue per se, we have also seen increases in energy prices. And that might lead people of a certain age to think back to the early 1970s and the developments we had then in global oil markets. But again, this is a very different situation. What is going on now is that while there is a reduction in supply to some extent driven by some of the global sources of petroleum, the Middle East, Russia, for example. We now have in the United States the possibility to expand our own supply substantially through unconventional drilling. The technology, the shale access technology that we have developed over several decades. Our oil is a little bit more expensive than that which is developed overseas, but it pretty much puts a cap on the potential for oil prices to rise. Somewhere in the range from $60 to $80 a barrel, it becomes quite profitable for U.S. sources to bring oil online. And that, in essence, puts a limit on the potential amount of price increase in that market. So unlike the 1970s, when the situation really seemed totally out of control from the perspective of U.S. consumers and also U.S. policymakers, we now know that the U.S. petroleum industry can produce if we need to, and that will help to hold prices down. So supply chains, petroleum, those are really the two major sources of issues right now. It is in all likelihood the case that, as the Federal Reserve has said, this is going to be a transitory inflation problem. Transitory, not to say it's going to go away next week or next month, but that over a period of time, we are going to get a handle on this issue, and consumers do not need to worry about circumstances getting out of control in the sense that they did several decades ago here in the United States.
So, Joe, it's good to know that you and other economists feel that this is transitory. But I think what everybody really wants to know is, how long do you expect this level of inflation to last?
The supply chain issue is it's extremely complicated. A supply chain involves a lot of links. Many of those links are weak. If following the news, container ships are in short supply. Many of them are anchored outside of ports. Containers are getting to be in short supply. Then we have the issue of shortages in storage space, in warehouse space, and in distribution centers around the country. We have shippers have difficulty hiring enough drivers to carry their goods around the country. So this is it's a multi-dimensional issue. It's got a lot of weak links. I believe that Treasury Secretary Yellen was probably in the right ballpark when she said that she anticipates some relief in this problem beginning in the second half of next year. So we're talking about another 6 months, 9 months, potentially of continuing uncertainty of supply and, to some extent, higher prices. It's not an overnight issue, but I think we still can continue to be confident that this is not a situation that will go on forever, not a situation that will get totally out of control, and that over a period of time, we will begin to get a handle on this issue, and we will begin to see some relief probably within the next year.
I know everybody is looking